All right, this just dropped within the last 2 hours. Elon Musk officially set the price for SpaceX's IPO. 135 a share, 555 million shares offered, and 75 billion raised. That makes this by a factor of more than 2, the largest IPO in the history of the United States, which doesn't really surprise me. Anything Elon Musk does, the dude does it big. And betting against him, usually you don't end up winning. So I am very interested to see how this is going to play out. And we're going to unpack a little bit of data here today and overall some thoughts around whether or not this is a good investment long term, whether this is something you want to buy right away. And the question I want everybody thinking about is, IPOs are fun and they're sexy, but there's a couple things that you want to be aware of. And, I think there's 2 trains of thought here. You have the opportunity to buy the greatest company of the 21st century in SpaceX, the most valuable or at least valued company, or are you about to buy the most expensive FOMO investment stock of your lifetime? Because at 1.75 trillion valuation on a company that right now is losing $5 billion a year, those are 2 very different things. So let's go ahead and break it down in today's episode. All right, guys, today we're going to pull apart the SpaceX IPO. And as you guys know, I'm a retail investor. I've done a handful of pre-IPO investments that have done well when they IPO. Most of my input and sentiment and analysis, honestly, get from Ryan. Obviously, I got other investors and traders that I like to get feedback from. So I'm going to kind of compile a lot of thoughts and data here. I know many of you have reached out, texted into the show, asking about what do you guys think about the SpaceX IPO? And you've heard Ryan's kind of thoughts on it. If you haven't listened, I think he talked about on this last week's episode of Money Moves. And you can kind of get his take there, and some of that we'll touch on today as well. So what the S1 actually shows, we're going to dive into why this valuation is both honestly breathtaking and also very kind of scary and dangerous, and the exact framework that I'd use to make a disciplined decision before this June 12th IPO. You're going to walk away with a clear head when everyone else around you is honestly losing theirs right now. So let's start with what just happened, because this is still breaking as I record this. Now, once we launch this, obviously it's going to be a little bit of late news. Now, according to CNBC and confirmed across X, in the last couple of hours, SpaceX has set a fixed IPO price of $135 per share. They're going to offer 555 million 0.6 shares. The total raise will be $75 billion. At that price, the fully diluted value lands around $1.75 trillion, which is going to be the most expensive IPO or most valuable IPO in history. And the roadshow, which kicked off this morning, June 3rd, is already moving. So you're going to start seeing and hearing a lot more of this now, being that it's right around the corner. Pricing happens June 11th. And shares are going to start trading on the NASDAQ under the ticker symbol SPCX, so SpaceX, on June 12th. Now, the fact that they came in with a fixed price, not a range, is itself a signal worth noting. Most IPOs, they give you a band, they give you a range. And SpaceX came in and said, this is the number, and that either means that the demand from institutional investors during their testing the waters meetings was so overwhelming and positive that they didn't need to feel it out. Like, hey, we don't need to give you a range. You better come in here because we've got plenty of demand. Or they're being extremely deliberate about just managing the perception and its optics at a specific valuation that they want. My guess is it's probably a little bit of both. To put the scale in perspective of this, Saudi Aramco held the previous record for the largest IPO ever. That was $35.4 billion raised in 2019. SpaceX is raising more than double that. It's more than triple the size of Alibaba's US debut. And at 1.75 trillion, that slots it in immediately as the 7th most valuable company in America right out of the gate. Hey, what's up, guys? I'm so excited to announce if you are an investor looking to generate consistent passive income, then I've got something for you. I just launched the Imagos Income Fund. It is a private investment debt fund. So instead of relying on long-term appreciation or big exit events like most real estate syndications do, we decided to keep it simple. Focus on first position asset-backed lending just like a bank, meaning your investment is backed by real collateral and structured to produce income from day one. The target return, 10% paid out annually and also paid out monthly. So no guesswork, real passive returns, true mailbox money. And because we're in the debt position, not equity, we're able to prioritize downside protection, maintain shorter durations, and stay in control of the risk, which is most important in environments like this. This is built for investors who want steady cash flow, strong capital preservation, and real asset exposure without the headaches of owning, managing, and waiting years for a payoff. So if this resonates with you, if you want to learn more, I put together a full investor presentation breaking everything down. All you got to do is just text the word income to 844-447-1555. That's income to 844-447-1555. I'll send you everything so you can see if it's a fit for your portfolio. So there's something to be said for that, right? That's above Tesla's current market cap of roughly 1.6 trillion on day one. We know how long it took Tesla to get to that point. So that speaks in volumes. Before it's even traded a single share publicly, that would put it in the top 10, really top 7, let's call it, most valuable companies in America. Wild. Elon is the GOAT. I don't care how you think about him personally or politically or whatever. When it comes to businesses, this dude knows how to create magic. When it comes to disrupting and transforming the world, the dude is the GOAT. Now, this is not just a rocket company anymore. I think a lot of people just think that because that's really kind of been what they've been in the media for. And I think that's important context to understand. In February 2026, SpaceX formally merged with Elon Musk's AI company, xAI, the same company that owns Grok, X, the platform itself, formerly known as Twitter, and a massive GPU company infrastructure. That deal was structured as an all-stock transaction valued at about $250 billion. So what's going public on June 12th is a combined entity, a rocket company, a satellite internet business, an AI development lab, and an orbital computing infrastructure play, all molded together, all under one ticker. So I think that's important to understand, like, hey, this isn't just some like new company and idea that he has. There's some established roll-ups underneath this ticker, this brand, this company. Now, according to the S1, and the filing that they just put out, the company generated $18.67 billion in revenue in 2025. 3 segments. Starlink brought in $11.4 billion. We all know what they do. 61% of that total revenue. The core launch business added $4.1 billion. xAI contributed $3.2 billion. Now, Starlink is growing hard. I mean, I know more and more people that are starting to use it for their internet just in their homes, in their businesses. You got airlines now rolling it in, right? So they're growing. Their subscribers doubled from 5 million at the end of 2024 to over 10.3 million by the end of 2025. Revenue projections for Starlink in 2026 are ranging, I think, from what I saw, like 16 to 24 billion. I know it's a big gap, but still a growth, right? Upside. So that's the bull case. That's the exciting part. Now, let's talk about the other side of the ledger because I think this is important. It's easy to get all excited about the theoreticals and the what ifs and all the new stuff that they're going to do. But you always got to look at, investments from a risk, lens and standpoint and just be realistic about, where the potential holes in your ideas and investment thesis are, right? So despite the 18.7 billion in revenue, the company posted a GAAP net loss of almost $5 billion in 2025. And that's a massive swing from 2024 when SpaceX on a standalone basis was actually profitable. And I think they were about like 791 million in the black. Now, the reversal is almost entirely because of the xAI merger. xAI generated 3.2 billion in revenue while burning approximately 14 billion in cash. So that's a pretty heavy delta. So when you think about that ratio, xAI is consuming more cash than all of SpaceX's other operations generate combined, that's a big number. And in Q1 2026 alone, the net loss was already 4.28 billion, and that's just one single quarter. So why does this matter to you as an investor? Well, let's start with the multiple, because this is the number that, at least gets my attention. At 1.75 trillion on 18.7 billion in trailing revenue, you're paying roughly 90 to 93 times the revenue, not earnings, right? Not EBITDA, the top line revenue for a company that is currently losing money on top of that. So for context, right, Nvidia, the most dominant AI hardware company of the last 3 years, trades around 25 to 30 times revenue. So we all know how people feel about Nvidia and what they're doing, and they're at 25 to 30 times revenue. This is going to be 90 to 93 times revenue. Now, I'm not saying, right, they're both equal. I'm not saying that we shouldn't be open to the idea of paying that, but that's a delta that caught my attention. So you're being asked to pay 3 times the Nvidia multiple for a company that does not have positive net income. Now, the counter argument to that is that Starlink's trajectory justifies the premium, which I totally can understand and get. I think there's plenty of runway for what Starlink is doing, and there's a whole new terrain of space capitalism that is not being touched that Elon is going to be the first and likely the category king of. So that's also something that you kind of have to, but again, that's still right now, not saying it's not reachable, but it is far reaching at the moment. So you're paying for a future that has yet to come true. Now, the second stake, and this is the structural one that I think most retail investors are, maybe overlooking, is you are not buying an ownership stake in the traditional sense. The dual class share structure means Musk controls 85% of the voting power. That doesn't matter how many shares you accumulate or how many you own. You have essentially zero say as a stockholder in how this company is run, which that's been his MO. So I don't think there's anything too red flaggish about that. But, I'm just going to go out on a limb and say Elon's probably going to make better decisions for what's going to make the company successful than most of us, and maybe his stockholders. But again, democracy in how people set up and structure companies that they are, thinking about investing in, those are things that investors take into account, right? So not necessarily a deal breaker, but maybe you want Musk making the calls, right? I would say I do. But you need to know what you're actually purchasing, right? So you're buying price exposure to a narrative, not ownership rights over a business. Now, the third thing is the float and the forced passive demand. When SpaceX enters the NASDAQ 100 index, which it will almost immediately at this size, every fund that tracks that index has to buy SPCX, right? SpaceX. Analysts have estimated that NASDAQ 100 tracking funds alone could generate 8 to 12 billion in forced passive buying shortly after listing. So that's really more mechanical demand. And that can send the stock going much higher, pumping it pretty significantly, not because of the fundamentals though, but because index algorithms require it. So they're required to own it. So just something to be aware of there when you start seeing maybe some of this euphoria and price pumping, right? Some of that may be manufactured mechanical demand, which sounds great until that demand, stops, right? And the real price discovery begins. Now, the fourth and the last thing I would say is this is something I've been watching on X and just, kind of taking a pulse. There's a credible theory circulating that the Bitcoin sell-off we saw this last week, pretty massive drop, the 1.64 billion liquidation cascade that took Bitcoin from, I think it was like 82 2 weeks prior, now down to 67. Many of those ETF outflows, big funds, is at least partially connected to the SpaceX IPO, which could flow right into that and pump the price even higher. So pretty, straightforward, right? Institutions and high net worth investors who have been holding Bitcoin as a liquid risk asset are rotating some of their capital out of crypto, and they're looking at, an IPO like SpaceX, right? You've got Anthropic that's talking about coming on. You've got a handful of pretty big, IPOs this year. So maybe some rotation of capital here. We'll see, what that looks like. But you know, there's the post-IPO window that I think is really the elephant in the room that needs to be talked about. And this is what most investors, if you're not seasoned, if you're a long-term holder and you can stomach the volatility, because it's going to be very volatile. But the post-IPO window is something that you should think about, right? And this might be something where, like on the podcast, what Ryan said is, hey, we're going to stay away from it for a couple weeks, maybe even a couple months, and let it find its equilibrium, its bottom, its base. And then we'll figure out, what we want to do and go from there. So mega hyped listings almost always surge on debut day. I've had, multiple IPOs that I pre-invested in and got all excited about because I was in a lockup period. I couldn't sell anything, but they pump really big. And then, right, investors want to take profits and it starts to pull back and even sometimes lower than where it IPO'd at, right? So the people who got institutional allocations at, let's say, like 135, they've already made money before you can even click buy on your brokerage app. And those are the individuals that are likely going to sell into the retail investors that are pumping it, right? So, here's what I keep coming back to. Buying SpaceX at the IPO price is like buying a house the day it lists at the peak of a spring bidding war. The location is incredible, the story is incredible, but you're paying maximum price with maximum competition. You can't negotiate any of the terms. And there's a line of people behind you who paid less and will sell to you the moment they are allowed to.
Here's the thing about most investors right now. They're consuming a ton of content, but they're not actually more informed. They're reading all the headlines, they're watching the tickers, they're following all the noise that mainstream media wants you to follow. And at the end of the day, you're still not informed on what it actually means for your deals, for your portfolio, or for your next move. So if you're listening to this right now, I don't think that's you. I think that you actually want to understand what's happening, how it impacts your investments, what you should be doing going forward, what you shouldn't be, and not just reading about it. That's why I decided to build the Wealth Intelligence Brief, a newsletter sent to you 3 times a week directly to your inbox where we cut through the noise. We send you the macro data, the real estate intel, crypto signals, and all of the unfiltered takes in 5 minutes or less for free. Eliminate the noise, keep the edge. Sign up by texting the word WIB to 844-447-1555. That's WIB to 844-447-1555.
So what I believe, and this is just my theory and thought here, SpaceX is probably going to be one of the most transformative companies of the last 50 years and looking forward the next 50 years. What they've done to launch economics alone, reducing cost per kilogram to orbit by more than 90%. I mean, they've done some insane stuff, right? Starlink is a real cash engine growing in markets that are largely uncontested. You've got XAI generation and how they're leading in the AI front. I mean, they're catching rockets in between freaking steel claws out in the middle of nowhere. Like it's impressive, right? The vision is real. I'm not dismissing it. And I do believe long-term, very bullish on SpaceX. I mean, the world of space is an untapped world of capitalistic opportunity that big companies, big institutions, big investors, and Elons of the world are going to find a way to pioneer and monetize, right? So I do believe that Elon's going to crush this. But the vision and the valuation today are 2 separate conversations, and the market is only having one of them right now. So, Warren Buffett said something at Berkshire Hathaway's annual meeting just a few weeks ago that I have been, kind of going back to a little bit, especially in the context of this IPO. He said, we've never had more people in a gambling mood right now. I mean, look at where we're at. And I'm not saying that, we're going to see some major crash, but we've got a lot of, all-time highs continuing to get pumped up that could be overbought a little bit. We've got a lot of things that are maybe a little overinflated. And a lot of that is being driven either by leveraged investments or, people just FOMOing into stuff that aren't necessarily looking at the fundamentals of these things. But he compared the market to a church with a casino attached. And right now, SpaceX sounds like and looks like the loudest table in the casino. So I think short term, price is a coin flip driven by the sentiment. I think the fundamentals are there. And I think long term, it's going to do great. I'm going to stay away from it for, like Ryan said, for the first couple weeks and months and see how it goes. But I definitely want to have some SpaceX in my portfolio. I think it'd be silly not to have some kind of exposure to, I believe in that realm, that category, and it being something very new that is somewhat getting democratized and giving us, SpaceX is going to be our proxy, our access to a world that I think is untapped with infinite opportunities, at least from what we know scientifically. So crowd is hyped for sure. But also we've seen this movie before. Facebook's IPO, arguably one of the most anticipated public offerings of its era, popped, then crashed more than 50%, and it sat underwater for over a year. Amazon, same thing, went public, surged 400% in the dot-com boom, then fell 90% in the crash, and then became one of the most important companies of our lifetime, right? The greatest long-term investments in history almost always offered a better entry than the IPO date. That's all I'm saying. So the question isn't whether SpaceX is going to be a great company and crush it. It's more a question of what price actually makes sense for you to enter. I am not a day one buyer, at least not at this price, not with this structure. That's not fear. That's just my discipline and my investment rules. And I am curious to hear what your thoughts are. Let me know. Are you going to invest? Shoot me a text, 844-447-1555. As always, appreciate you guys tuning in each and every week. We'll unpack this probably on the next Money Moves. Maybe I'll do a follow-up episode on this once it does IPO. Until then, keep investing in yourself and your wealth on your march to $1 million bond. Cheers.
Well, that wraps up today's episode. Thank you so much for tuning in. As always, you guys know this show would not be what it is without you, the amazing listener, the support, sharing this out with other people who can gain value from it, taking 60 seconds to leave a review. If you haven't done so already, those things mean the world to us and ultimately help us spread this message out to as many people as we possibly can to help them on their wealth building journey. If you have any particular links or resources that you're trying to track down that were mentioned in this interview, be sure to check out this episode at millionairemindcast.com, where you can find access to all that information. And of course, if you haven't checked out the Wise Investor Vault yet, be sure to head over to wiseinvestorvault.com to check out all the tools, all the resources, the checklists, the spreadsheets, the trackers, all kinds of amazing things that can help you on your wealth building journey at the wiseinvestorvault.com. If you haven't connected with me on social media yet, I'm consistently putting out more content, stories, value to help you on your wealth building journey. And one of the best and most exciting things for me on a weekly basis is getting to connect with you guys. Getting your DMs, hearing what things impacted you, what you need help with is a big way that we continue to drive the content for this show. So if we're not connected and following each other on Instagram, on social media at @officialmattia, give me a like and a follow. Would love to connect with you there. And of course, don't forget to get on my deals list. If you're an accredited investor, you want to look at more deal flow. You want to see what deals I have access to, what deals I'm raising capital for. This is an exclusive list that I only put out to my accredited investor list, my Millionaire Mindcast family. So text the word deals to 844-447-1555. And with that being said, thank you again so much for supporting the show. Until next week's episode, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.